Hello everybody, and welcome to our construction tax webinar. My name's Isabel D'Inverno. I'm head of corporate tax here at Brodie's, and I'm going to be joined by my colleague Bob Langridge, who's an associate in the corporate tax and incentives team. And I hope everybody has managed to join by now, although I can see a few people still trickling in, as they say. Anyway, we'll make a start, and hopefully people can join over the next couple of minutes. So today we're going to be talking about the construction industry scheme. We're also going to be talking about the VAT on damages and termination payments, new rules which have just come in. And Bob's going to be talking about that. And then we'll be talking about the new VAT reverse charge for construction services, which is coming in from the 1st of March 2021. And obviously the reverse charge for construction services is perhaps the main item of interest for everybody. But in order to sort of understand how the reverse charge for construction services works, you have to obviously know about the construction industry scheme, because that's at the heart of it, and a lot of it is based on that. So the construction industry scheme, if we look at the various components of it, it's a tax deduction scheme basically. So contractors have to deduct tax and pay the tax to HMRC instead of paying the whole of the price for the job to the subcontractor in most cases. And if tax is deducted, it's treated as an advance payment of the subcontractor's tax or NIC liability. Or if the subcontractor is a company, then it's treated as an advance payment of PAYE and NIC. And then when that's exhausted, corporation tax. CIS is an admin heavy regime. There are lots and lots of CIS returns that have to be done and procedures that have to be followed. And consequently, there's a lot of scope for getting it slightly wrong and incurring penalties for failure to either register or complete returns or whatever it is. And we are conscious of quite a lot of HMRC activity in relation to the CIS in recent times, and that's likely to ramp up a bit when the reverse charge for construction services comes in. So moving on, who is affected by the CIS? Well, people who have a business which includes construction operations like developers, construction companies and all the rest of it are mainstream contractors for the CIS. But it doesn't just affect them, it also affects other businesses where the construction isn't their main business, but they spend quite a lot of money on it. And the amount of money that you have to spend to be caught by the CIS and to be a deemed contractor is £1 million a year on average over the last 3 years. So if you're in that ballpark, you can be a deemed contractor, which means you have to register under the CIS. And once you have registered under the CIS, this is what you have to do as a contractor. It is up to the contractor to decide whether the CIS deduction regime applies to a particular payment. So it's the contractor's responsibility. But the first question is actually not about the CIS at all, really. It's about employment, self-employment, because the CIS doesn't apply to employment arrangements. So that's the first thing the contractor, the person making the payment, has to decide, is the person I'm paying actually an employee? And if they're an employee, then they get paid under PAYE, and CIS has got nothing to do with it. So the CIS only applies to payments to self-employed people. So once you've got past the first question of whether it's employment or not, and you know it's a self-employed person, you then have to consider whether the CIS applies, and you have to look at whether it's a contract for construction operations, construction services. And so you have to consider what is the nature of the contract, what's being done under it, and whether that's within the CIS. So once you've just made that decision, you then have to look at whether the person you're paying is registered under the CIS. And you can be registered under the CIS in different ways as a subcontractor. You can be registered for gross payment, which means you can actually get paid gross. And that is the situation for many of the really big companies. They're registered for gross payments, so nothing actually gets deducted from payments to them. But if you're not registered for gross payment, then you'll get tax deducted at 20% if you are registered under the CIS. And if you're not registered at all, tax gets deducted at 30%. So just to summarize those things on the next slide in the table, the contractor is responsible for verifying the subcontractor's registration status with HMRC and deducting tax. So the contractor can either use the online HMRC service, well, in fact, they're supposed to use the online HMRC service, or they may well ask the contractor, but it's up to the contractor to determine the status. The CIS applies to labour only and not materials. So if there's a mixed supply of labour and materials, there has to be an apportionment. As we'll see with the reverse charge later, it applies to both, but the CIS, it's labour only and not materials. Okay, moving on. One of the biggest problems with the CIS is that it really doesn't tie in with the real world. So in the real world, you have employers, main contractors, building contractors, subcontractors. But in the CIS, all you have is contractors and subcontractors. And it's pretty simple for the CIS. The contractor is the person who's paying for services, and the subcontractor is the person that's providing them. So there are only those two characters in the CIS world. And if we look at the next slide, you can see a normal supply chain that we'd all recognize with employers, main contractors, subcontractors, and architects and engineers over at the side who are not caught by the CIS at all. But looking at it from the CIS point of view, the employer in this chain is actually a contractor, and the main contractor is a subcontractor. But that's not the end of the story, because the main contractor, when you look at his relationship with the subcontractor in my left-hand side chain, the main contractor is actually a contractor as well for the CIS. So the main contractor is both a subcontractor and a contractor. And if you are both subcontractor and a contractor, you have to register in both capacities under the CIS. Okay, moving on. I think we've dealt with that slide, so we move on to the next one. What does it cover? Well, it is not overseas operation, but it does include UK companies doing, non-UK companies doing work in the UK. It's anything in UK territorial waters as well as on the land. And it's anything done to buildings, structures, civil engineering works, but it's labour only. And on the next slide, we'll see a sort of illustration of the various things that are covered, but some of this can be quite complicated as to whether you're in and out of the CIS. And both for the CIS and for the reverse charge, this will be an important thing to ascertain whether you're actually, whether what you're supplying or paying for is actually within the CIS. So construction, alteration, repair, demolition, internal or external painting of buildings, cleaning if it's part of the construction, installing heating, lighting, air conditioning, and so on. So moving on, as we've said, the problem is that there's lots of admin and there's lots of possibilities of failing to get this right. So the compliance risk is high. And there are contractors who at the moment are being faced with pretty big bills from HMRC in order to sort of recompense HMRC for the fact that they've not been registered as they should have been. So just quickly looking at a couple of practical CIS issues. One area where it comes up a lot and is not necessarily recognised is in relation to landlords' contributions. And although there is an exemption for some types of reverse premiums, it doesn't apply across the board. So where a landlord's paying for works of some kind in connection with the granting of a lease, the first thing is that you have to consider whether the landlord's a contractor or deemed contractor. And if they are, the CIS could apply to the payment. So you have to look at what the landlord spent on CIS activities over the past 3 years. There's an exemption for work that's carried out on your own premises, but this doesn't apply in these circumstances because it doesn't apply to let property. So if the tenant isn't registered under the CIS, there can be a significant cash flow issue, which we can see on the next slide, because the landlord is a contractor. He's paying a payment of £1 million to the tenant who's going to be getting some works done. But in fact, the tenant's not registered, so the landlord has to deduct tax at 30%. And looking at it from the tenant's point of view, that's likely to be a bit of a surprise, particularly if the tenant themselves has got to actually pay £1 million to a main contractor who's registered for gross payment. So there's suddenly a £300,000 gap. The ways to fix this, as we'll see on the next slide, is that the tenant first of all registers, and that reduces it from 30% to 20%. And that can be done very quickly by phone or on the internet. And also the tenant can apply for gross payment if that's possible because of the work that the tenant's going to be doing. Curiously, but helpfully, the tenant doesn't actually have to register themselves as a contractor because the tenant can make use of this exemption for work carried out on your own premises. In this example, actually, we did get the tenant to apply for registration for gross payment, and it only took about a month to get that through. So at the end of the day, in that particular example, all the payments could be made gross, which was good. Moving on to the other example, this is a one we come across quite often, where there's an SPV that's been set up by a property group, and although the group itself is CIS registered, the SPV itself wasn't. But in terms of what it was doing, it was actually a mainstream contractor. So we were trying to sell this company, but the purchaser's solicitors raised in due diligence the fact that it wasn't registered, and the purchaser's bank actually refused to lend in the first instance. So luckily, all the payments that had been made by this SPV were being made to people who were registered for gross payments. So there was no CIS issue, but it took us a long time to persuade the bank solicitors that they should be happy to lend with an undertaking that the SPV would register for the CIS post-completion. So that was a situation where a lot of professional time and expense was spent dealing with the fact that this company hadn't registered under the CIS. So it's well worth checking that you are registered in every situation where you're supposed to be. Now, moving on to VAT on termination and damages payments, Bob's going to take us through that.
Hi, good afternoon, everyone. So this, I'm sure a lot of you will have heard about already. On the 2nd of September, HMRC published Revenue Customs and Brief RCB 12/2020. And on the face of it, this is quite a surprising brief that they published, because what they have done is effectively heavily restricted the guidance that they issued around when certain compensation payments, and as we talk through this, the reason for the air quotes should be clear, but when certain compensation payments are outside the scope of VAT and when they are inside the scope of VAT. It's contrary to their prior guidance, and the net effect of that is that a lot of things that have been treated as outside of VAT are potentially now VATable. The document itself and the revised guidance seems kind of restricted in scope, but it's got fairly wide implications. And unfortunately, I think when HMRC were preparing this, they didn't consult very widely. They were looking at one specific sector and weren't thinking cross sectors, how will this apply to other areas? And so particularly in land and property and construction, we think there are a number of unanswered questions which the Revenue are currently considering. The other surprising thing about this is that straight out of the gate, when they published this brief, HMRC said effectively that we're changing our policy and we're doing it retrospectively. And anyone who's followed our old guidance for the past 4 years, you may have been doing it wrong. So you need to look back at any payments you have made that might be compensation. And if they're now within the scope of VAT, we want you to account for that VAT. They've not taken a very pragmatic view on this to date, and there is probably a reason for that. However, there's been a lot of pushback, and we'll talk about the retrospective element at the end. So on to the next slide. Why have HMRC changed their guidance? Well, the reason that they provide is that there are two quite compelling decisions from the European Court of Justice from 2018, I think the decision in Mayo, and more recently, the decision in Vodafone Portugal. And I just want to talk briefly through the facts in Vodafone. At a very high level, the Vodafone case is about mobile phone contracts, and these are fixed term contracts. So we all know this, when you sign up for a mobile phone, you are signing up for a minimum term of 12 months, 18 months, what have you. Fairly standard contracts provide that there's a monthly fee, and if you terminate the contract early, that entire monthly fee gets charged. Vodafone Portugal, where people had been terminating early, were not charging VAT on those termination payments for the outstanding months, on the basis that this was effectively compensation and they weren't supplying anything anymore because the contract had come to an end. And the ECJ held that, first of all, no, there was a supply here because Vodafone to its customers had made this facility available for, say, 12 months. And that was the nature of the supply they made. And in fact, they made that supply right at the outset. And two, that this termination payment was consideration for this supply because ultimately the price of this supply is 12 months of payments. And the fact that you are having to pay some of these in the form of a termination payment doesn't stop it being a payment for the supply, for making the telephone facility available, and therefore VAT ought to apply. What is interesting in part about the Vodafone Portugal case, and perhaps is where HMRC were coming at this originally, when they made it retrospective without issuing much practical guidance, is that this is a business to consumer case. So the end users, the people who would be charged the VAT ordinarily, are people like you and me, not in business, and therefore aren't able to recover that VAT. So it is effectively were you cynical, you would call it a cash grab by HMRC. It's more difficult where you're dealing with business-to-business supplies, as most of us dealing with construction or development contracts will be, where VAT is recoverable. And that's an area where HMRC really hasn't given much clarity at the moment. Anyway, moving on to the next slide. Under their old guidance, HMRC had a fairly clearly delineated position on when a compensation payment was within VAT and when it was outside of VAT. And this was to deal with, various cases which gave seemingly contradictory results. But broadly, HMRC's view was, if your contract provides in its terms for, say, a right of termination or liquidated damages, then someone exercising a termination right and paying the attached cost per the contract, that was outside of VAT. However, if there was no existing termination right, so you would have to negotiate a payment to be released from the contract or released from a lease, this would be within the scope of VAT. And a classic example, break payments in leases. If a lease has a break clause with a payment attached, no VAT on that, even if the property has been opted to tax. And if you have a break clause that you have to negotiate outside the terms of a lease, it's within VAT. Now, HMRC's policy broadly, and this is a quotation from their guidance, is to treat payments arising out of early contract termination as consideration for a taxable supply. Businesses must account for VAT on these fees. This applies in cases where the original contract allows for such a termination, as well as when a separate agreement is reached. So what they're doing is effectively collapsing that distinction between contractual and non-contractual payments. If we flip ahead, again, where contracts were expressing things as liquidated damages or breach of contract payments, they were traditionally held to be outside of VAT. Under the new guidance, HMRC's view is, look, these may be designed to compensate you, but because the circumstances giving rise to this are envisaged under contract and they're part of that agreement, they're consideration for what's provided. And therefore, again, the expectation under the guidance as it stands is that VAT would apply. If we move on to the next slide, I think there are a number of points, if one looks at sort of underlying case law and goes back to first principles, that can arise here and that are useful to bear in mind. Because at the end of the day, I think, and this kind of recent guidance clarifies it for me a bit, that compensation is a bit of a dirty word in VAT, and it's not a terribly helpful word because there's no VAT concept of compensation in the round. And we always say there's no VAT, there's no tax on compensation, and it's kind of a truism. But the question arises, well, what is compensation? It's not defined in VAT. Instead, for VAT to apply to a payment, you really need two things. And that's what we need to think about now with all these kind of contractual payments, is first of all, there needs to be a supply that actually takes place. Something needs to be done or given. In the Vodafone case, it's very clear that there is a supply. The mobile phone contract, the facility for using that phone for 12 months. And secondly, there needs to be a direct link between the payment made and the supply received. And there has been quite a bit of jurisprudence and judicial consideration of this, both in the UK and also at the ECJ. And the leading case, the one that gets cited the most, is the case of Tolsma against Holland. I'm not going to go through all the facts of this, but if you think going after mobile phone contracts is a cynical cash grab, Tolsma is a case where the Dutch government tried to get a street busker to account for VAT effectively on the money that people put in his hat. And the Tolsma decision, the ECJ said, look, there is no VAT on the money in this guy's hat. And the reason for that is because there's no direct link, because direct link requires three things. You need to have a legal relationship between the parties, such as a contract or agreement. That is absent here. And under the terms of that legal relationship, there needs to be reciprocal performance. Something is done in exchange for something else being done. And it needs to be reciprocal. So it needs to be both sides required to perform. And thirdly, the payment received by the supplier is effectively based on the value of the service and not other factors. And in Tolsma, they fell down on this again because the amount paid had nothing to do with the music. It was based on what people felt like giving or the change they had in their pockets. On that latter test, again, there's another interesting case, European Commissioners against Finland. In that case, means-tested legal aid payments by clients to their solicitors. So someone would qualify for legal aid, but may have to make top-up payments based on their own financial circumstances, weren't treated as consideration for legal services because those payments weren't based on the value of the legal services, but the ability of the clients to pay. And more recently, we had a case, Lloyds Banking Group against HMRC, redundancy payments paid by Lloyds to a third-party company that was helping winding up its Irish business were deemed on the basis of the economic reality of the underlying contracts, not to be consideration for services. So these are all kind of factors that cut against that assertion by HMRC that if a payment is envisaged under a contract, it's necessarily going to be taxable on the same basis of the contract. And you can also see with, I think, Vodafone, it's very clear that there is a supply and that this direct link test is satisfied. There's a legal relationship, a contract, there's reciprocal performance, and the payment of these termination fees is based on the value of the services that Vodafone would provide, because it's just the outstanding monthly payments. If we move on to the next slide, looking at different kinds of payments then, these aren't things that HMRC has updated its guidance on yet. In some cases, their guidance say that these things are definitely outside of VAT. And I think that has to be read with a pinch of salt. Brodie's Law Society of Scotland, Law Society in England and Wales, VAT Practitioners Group, the British Property Federation are all currently interrogating HMRC as to how these various things will be treated. But it looks to us lease break payments, so payments by tenants for break option. If there is VAT on the underlying rent, our view is this is fairly clear cut. Tenant break payments will be VATable if the rent is VATable. Dilapidation payments, HMRC are currently considering this, but there is a very, very long-standing position that dilapidations are outside the scope of VAT. If you look at the sort of direct link elements of the Tolsma case, I think it's very hard to see how dilapidations fall neatly within that. So our expectation is that HMRC should say that dilapidations are fine. Liquidated damages, HMRC are considering this again. If they try to sort of universally class liquidated damages under construction contracts as subject to VAT, that could be a big issue for the construction industry. At the moment, our advice is really that these will have to be considered on a case-by-case basis. Liquidated and ascertained damages. Now, our view is that these probably will remain outside the scope of VAT. What we have with liquidated and ascertained damages is always a payment from a contractor to their employer for underperformance in some area, or for various bits of breach of contract. And so that first question about supply becomes relevant. Is the employer supplying anything to the contractor? It's hard to see that they are making an independent supply by receiving this payment. And the supplies under the contracts to which these payments relate are supplies from the contractor to the employer. It's a payment from the contractor to the employer. So that payment almost seems to us to be going in the wrong direction for VAT to apply on the basis of the contract itself. And finally, delay in payments, delay in expense payments from an employer to a contractor, for example, if there's a delay in letting the contractor on site. These are more tricky, and these are probably the biggest gray area out of the various forms of payment listed here. I personally, I think there is a risk that HMRC might ultimately say that these are taxable. You can certainly see how a delay in expense payment might fall more within the direct link test than outside of it. But this is again with HMRC to confirm. Next page. On the retrospectivity, this is almost the most surprising thing to have come out of the Revenue and Customs brief. And it was universally unpopular. I suppose the HMRC justification for this is that they were changing guidance because ultimately they decided their guidance was wrong. There's no change in the law at all. HMRC have provided a limited amount of grandfathering in what they've said to date, which is that if a payment is made before the 2nd of September, provided they have given a written opinion saying there's no VAT, so it's a genuine compensation payment, then that is outside the scope of VAT and they don't expect a correction to be made. But otherwise, if you're just relying on the guidance, they expect you to go back and correct errors. And payments made after the 2nd of September, they want to apply VAT even if they have given a clearance. Our view is this is a bit of a mealy-mouthed position because the old guidance was amongst the most clear VAT guidance HMRC have, which means that certainly in my practice, I've never been aware of anyone ever writing for a clearance, and B, if HMRC view their guidance as clear, they will respond to your clearance application by saying, our guidance is clear, we don't see how this is a question, but without actually answering your question. So I think very few payments are going to fall within that limited grandfathering precision. If we flip onto the next slide, it's almost certainly clear that HMRC have been too hasty in this. And what they have told us now is that they're not proactively pursuing taxpayers for VAT on compensation payments for the last 4 years. And anecdotally, I have heard that the only people who are being approached are, for example, in the telecoms and utilities industries, where the contracts are very similar to those in Vodafone. So I suppose unusually, because normally when we do a tax seminar, the takeaway advice is you must come and speak to us about this. Our advice here is, whatever you're hearing on this, I think sit tight for now because further HMRC guidance should be forthcoming. They're aware that this has caused an upset and they're considering its application to land and property and construction sectors. The main takeaway then is for payments you're negotiating now or contracts you're negotiating now, have a look at the contractual provisions underpinning them if they are underpinned by contract. Are they robust enough? Do they allow you to charge VAT to your customers if VAT turns out to need to be charged? Okay, back to Isabel for more confusing VAT with the reverse charge.
Yes, the reverse charge for construction services. So it's starting on the 1st of March next year. It's been delayed several times, as we know. We don't think it's going to be delayed again. And it will apply to you if you are registered for VAT and you either supply or receive CIS services, which sounds moderately simple. And the big change that's happening from the 1st of March is that where this reverse charge applies, the customer will pay the VAT to HMRC and not to the supplier. So that, in a nutshell, is the big change. And the customer can recover the VAT as normal, but they'll be paying it direct to HMRC. And it doesn't matter if you're a subcontractor, so if you're supplying services, it doesn't matter if you're paid gross or net under the CIS. The VAT reverse charge, as I think I mentioned earlier, applies to both labour and materials, which is confusing in itself. But the payment needs to be reported in the CIS for the new VAT reverse charge to apply. And VAT needs to be chargeable at the standard rate or the reduced rate. So if you're doing something where it's zero rated, you don't have to apply the reverse charge. The reverse charge doesn't come into play. Also, if you are making supplies to a so-called end user or an intermediary, which is someone connected with an end user, you don't have to, the reverse charge doesn't apply, but the end user's got to give you a certificate. So both the contractor and the subcontractor have to be VAT registered. The contractor needs to be registered under the CIS. And if you're in that ballpark, then the new reverse charge will apply. So I think on the next slide, we've got a HMRC suppliers flowchart, which is actually quite helpful in terms of figuring out whether or not you need to apply the reverse charge. And this is looking at it from the point of view of the supplier of services. So we'll go through this in a bit more detail, but don't use it for employment businesses, first of all. Does the supply fall within the scope of the CIS? Yes. Is the supply standard rated or reduced rated? Yes. But if the answer is no, then you drop out at that stage. And looking at the rest of the flow chart, the other questions are, is your customer VAT registered? Yes or no? Is your customer registered for the CIS? And if they are, then have they given you an end user certificate? But if they have, then the normal VAT rules apply. And if they haven't, the domestic reverse charge applies. So that's quite a good flow chart. And I think on the next slide, we'll sort of start to go through bits of it. So the first bit on the flow chart that we highlighted is the bit where it says, do not use it for services supplied by employment businesses. Supplies by employment businesses are not subject to the reverse charge, even if they're in the scope of the CIS. And that's because employment businesses are supplying construction workers. And so for VAT purposes, they're treated as supplying staff rather than building and construction services. So employment businesses are not within the scope of the reverse charge. Does the supply itself fall within the CIS? Are the supplies specified construction services within the CIS? And that is thankfully the same rules as for the CIS itself. So I think the next slide just reiterates that. It's all the normal construction operations, which is familiar from the CIS. So if it's not a supply of something like this, you don't have to worry about the reverse charge. So the next question area is on the next slide is it standard rated or reduced rated? And if it isn't, then the normal VAT rules apply. So the reverse charge doesn't apply if it's a construction services which are zero rated, for example, construction of housing. But you have to be a bit careful about this because the sort of supply chain system is a bit different depending on whether you're building a house or building some of the quasi-residential stuff like care homes. So where you're building a house, the main contractor supplies will be zero rated and any subcontractor supplies will be as well. So in that supply chain for house building, the reverse charge won't apply at all. But if you're looking at building care homes and such like, it's only the main contractor whose supplies are zero rated and everybody else's are standard rated. So in that case, the reverse charge could apply. So you have to look carefully at who your actual customer is. Is your customer VAT registered? If your customer isn't VAT registered, if they're a private individual or something like that, or they're a non-registered charity or whatever, then the reverse charge doesn't apply. But again, you've got to consider who your actual customer is. So the overall project might be for a non-VAT registered organization or individual, but you as the supplier have got to look at exactly who you are providing your services to, and that entity might be VAT registered even if the end customer isn't. HMRC say that you should ask for your customer's VAT registration number, and you can check its validity on the VEAS website, or at least you can till the transition period ends, and then hopefully there'll be a UK sort of equivalent of this EU VAT checking mechanism. So on to the next question. Is your customer registered for the CIS? Because if they're not registered for the CIS, the VAT reverse charge won't apply. So ask your customer for details of their CIS registration. And if they can't supply confirmation, or if you're not sure, you can use the CIS online system to verify the customer's CIS registration number. So that's what to do if you need to check whether the customer is CIS registered. Next question, is your customer an end user? So what is an end user? an end user is somebody who's not intending to make further supplies of construction services. So if you're buying a new office block, as a company, you're not going to be making supplies of that. If you're an investor and you're buying a let property, then again, you won't be making further supplies. Local authorities are likely to be end users. End users have to provide written notification to the supplier that they are an end user for the VAT reverse charge not to apply. And I think we've probably got some wording on the next slide, which, oh, we've got the intermediaries first. Sorry, I forgot about them. Businesses that are linked to end users are treated in much the same way. So if you have, if you're part of the same group, for example, you're treated as an intermediary, and the supplies between you and the end user are not subject to the reverse charge, and supplies to you are not subject to the reverse charge. But it also applies to landlords and tenants. So if you have an interest in the same land, the reverse charge won't apply, which is just as well, because anything to do with landlords and tenants is difficult enough as it is. To get the end user treatment, though, it's not sufficient to be an end user. You've got to tell the supplier as well. So I think hopefully on the next slide, we've got the wording that needs to be sent. You can give the end user notification on paper, by post, electronically, in a contract. You can have it in general heads of terms and so on. But this is what you've got to say. Well, you've got to, there's no precise wording, but you've got to say something along the lines of this. We are an end user for the purposes of Section 55A. Please issue us with a normal VAT invoice with VAT charge at the appropriate rate. We will not account for the reverse charge. So if you're an end user, you need to give the certificate if you want the reverse charge not to apply, but you don't have to actually. This is why the supplier's got to check whether an end user certificate has been given. And it's probably worth, certainly in the early days, actually asking the supplier, asking the customer if they're going to supply an end user certificate. Right. I'm going to hand over to Bob now to finish off on the reverse charge, if it doesn't finish us off. Bob.
So if you're acting in for a subcontractor, if you are a subcontractor, and you may need to charge VAT, you may need to apply the reverse charge. The first thing that HMRC is telling people to focus on is making sure that your systems can cope with the requirement and that they can issue reverse charge invoices. In some cases, this might require updating software, but I don't necessarily think that's essential, because it is in fact quite easy to show the reverse charge on your invoices, and we'll have a sample invoice in a moment. The most important thing for a contractor is, I think, really going to be your cash flow implications, because lots of smaller subcontractors effectively use the VAT that they collect from their clients as working capital, and therefore depriving themselves of that amount of working capital could have serious implications, particularly if that subcontractor is contracting with a trade supplier rather than a further subcontractor. In other words, you know, if my supplier is a builder's merchant from whom I'm buying lumber and bricks, they will be charging me VAT. So my outgoings are still the same, but I don't have that working capital sitting in the bank that I can use to fund things temporarily. The answer to that, because most subcontractors in that position should still be able to recover VAT overall, is to apply for monthly VAT returns. So rather than dealing with VAT quarterly, deal with it every month to speed up the recovery of VAT that you've had to incur on buying in supplies. VAT reverse charge invoices, relatively straightforward. It is basically a normal VAT invoice with a bit of extra information saying that Section 55A applies and that the customer is to account for and pay the VAT under the invoice to HMRC. If we flip to the next slide, here's a very basic example. You can see it has the net price of services, it has got the rate of VAT which applies, and then it just says the reverse charge applies without giving an amount of VAT, and confirms in the bold wording at the bottom that that is to be accounted for by the customer. There is also a helpful 5% disregard in the rules to stop people having to split hairs about whether the reverse charge applies, where you've got a contract where some of the services are within the reverse charge and some of them are not. If a contract has both elements in it, you treat the whole contract as subject to the reverse charge, unless 5% or less of the services are reverse chargeable, in which case you can ignore the reverse charge to save you having to apply it to a tiny bit, or for a tiny amount of reverse charge services, dragging an entire contract in. You can't get around the reverse charge by having separate contracts for labor and materials, so a CIS-able contract and a non-CIS-able contract. If you split them out in that way, HMRC will view them as both subject to the reverse charge, which makes sense because it should apply to both labor and materials anyway. In terms of administering penalties, HMRC are going to apply a light touch, as they often do with new legislation or new compliance regimes, for the first 6 months, with the proviso that you have to be able to show them that you're trying in good faith to comply with the requirements. So they're not going to harshly penalize people for innocent mistakes, but I think if HMRC think that you are deliberately not complying, then the light touch will not be applied. So all of the HMRC guidance around the reverse charge is available at this web address here. We've included a link to the technical guidance. No need to note that down, as we'll be circulating the slides later. In terms of construction contracts, the impacts construction contracts, this will impact some development contracts, except where they're with an end user, but they won't impact on contracts with consultants like the architects and the engineers. Those will still just stay in normal VAT. Also, the application of the reverse charge rules don't depend on the date of the contract. It depends when the payment is made. If your payment is made after, I think, the 1st of March 2021, it will be in the reverse charge if the reverse charge applies, even if your contract is dated now. So there are people who will have contracts dated now to which the reverse charge will apply when it comes in. In terms of sort of standard form construction contracts, the JCT and the SBCC are not currently intending to issue amendments to their contracts. They address VAT in general forms and, Section 4 design and build contracts, but because they're not UK specific, they don't give purely UK specific tax wording. So therefore, it'd be prudent to make small but not heavy-handed changes to, say, sections 1 and sections 4 of the standard form design and build contracts. Again, NEC 3.4 contracts are not UK specific. They don't specifically address VAT, but clause 51.5, if tax is to be paid by one party to another, that is to be added to a payment under the contract. And we'd recommend, you might make in contract data part 1 a small amendment to account for the specifics of the reverse charge and whether or not it's expected to apply. So, does anyone have any questions?
I think we've got a couple of questions so far. One of them is the person's asking about the change in HMRC approach on the termination payments and compensation payments. What should I be doing at the moment? Should I be reviewing everything going back 4 years and actually paying tax over to HMRC, or is that premature? I think that's one for you, Bob. But you need to unmute yourself.
I think that would be premature to be doing that now. If you have those records, there is no harm in getting a handle on what payments you have been making under various contracts. But given that HMRC are not currently taking proactive steps, they are being heavily pushed back on by various industries on the retrospectivity aspect of this. I think the prudent thing to do before you incur any time and expense is to wait for further HMRC guidance and to get a bit more clarity on how they are going to be pursuing this. I just don't think that HMRC have considered how this applies, for example, in the construction industry.
We've got another question about these new VAT rules. We've reached or we've negotiated a settlement with a supplier who failed to provide services for a number of years. They have agreed to make a compensation payment under a settlement agreement that sits outside the principal contract. If VAT application on the settlement sum requires a supply, is that established where the compensation payment relates to services that have not actually been performed? Bob, what do you think about that one?
Reading that question on my screen, it looks like the payment is coming from the supplier to the contractor. And so my suspicion is that, and again, this is surmise, HMRC may ultimately take a different view. The way I would be tempted to answer this is to say that the VAT charge shouldn't apply because it's the same party making the supplies that is making the payment. And so that payment cannot be in respect of supplies under that, under the agreement with that supplier. The only way HMRC, I think, could argue that that would apply is if they established that there was some separate supply being made by you to the supplier as a result of the settlement. And I think that's probably quite unlikely. So I think this probably falls under the no direct link or no supply. And therefore I would expect and hope that this would fall outside of that.
Okay, so that sounds like you're okay on that one. And next question is an interesting one. Is it possible to register for the CIS voluntarily? For example, because I'd rather apply the domestic reverse charge than have the cash flow cost of paying VAT to the contractor. Well, the first point is it's not, you don't get rid of the cash flow cost of paying the VAT altogether, because although you don't have to pay it to the contractor, you have to pay it to HMRC. So it may, you may have a timing difference there. But in terms of registering for the CIS, you can only really register for the CIS if you're either as a contractor, if you're actually a construction business, or if you have deemed supplies above the limit. I suspect HMRC would let you register voluntarily, but I'm not convinced it would have the cash flow effect that you think it might do, because you still have to pay the VAT to HMRC. So it may delay it, but it wouldn't make it go away altogether. I think.
Could I make a couple of comments on this one as well, just to round it out, because I think it's a good question. It seems to me that, well, if you have a fully, if the business in this hypothetical question is fully taxable, there may be a cash flow saving because you would account for input tax and output tax on the supply, and they could net each other off in a VAT return. Secondly, I think crucial to this question is, who are you in the supply chain? If you are an end user, You may have to register for the CIS, you may not, but that won't change the VAT implications because the domestic reverse charge doesn't apply to end users. And if you're further down the chain, then chances are you are within, you're able to register for the CIS anyway, because chances are you're mainstream construction contractor or developer.
Okay. Right. I think we've run out of time really to deal with any more questions, but do please send us an email if you have any supplementary questions. It is all really quite complicated in some respects, isn't it? And I think the chance of it being postponed again is pretty slight now, and HMRC do seem to be revving up to actually operate it. So if you haven't kind of looked at things so far, now is probably a good time to do so. Our email addresses are there, and we'd be delighted to try and help with any questions that you may have about the reverse charge. But in the meantime, thanks very much indeed for joining the seminar, and good luck with the reverse charge when it comes, and stay safe. So thanks very much indeed.
Thank you.